A retrade is simply a concession. I signed it. We're ready to go. Now, the seller was motivated to sell. So they came up and we said to them, how are we going to make this happen? Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And in this important lesson, we're going to be discussing what is a retrade and how you can successfully negotiate a retrade in your favor. Now, the word retrade, when I started back in the early 2000s, it was just commonplace. There was negotiation going on. You'd find a property you didn't like, or there was something wrong with the property that you didn't foresee during your due diligence, and you would say to the seller, hey, Mr. or Mrs. Seller, there's something wrong. I need to retrade. A retrade is simply a concession. And over the past few years, retrades practically disappeared. And it really is market specific. And you may be saying to yourself, well, what happened to negotiation in real estate back in 2020, 21, 22, and 23? Well, the market was hot. Retrades didn't work. If you tried to do a retrade, there was someone behind you that was willing to buy the property with those defects. And we see how well that's worked out for them now. But in any case, where we are in this current part of the market cycle, you can successfully negotiate a retrade if it is a valid retrade. It is market driven, and there's certain areas where when you're doing your initial underwriting on the deal, you're getting financial numbers, you're able to look at the property, you put a property under contract based on those numbers. Great. Okay, I've got the numbers. I'm making an offer based on the T12 and the numbers that you've presented to me. And I've also done a cursory look. I've seen the driveways. I've seen some of the air handlers outside, some of the air conditioning units. I've seen the windows. So I get a general idea of what the property looks like, and I'm basing it on all that information. Now, you get the deal under contract. Yes, baby. I signed it. We're ready to go. Your purchase and sale is signed by both sides. Now you have 30 days to inspect all that you actually were able to look at and were able to diagnose from what the sellers gave you, all that information. Well, game on, because you better have an inspection and you better be combing through all of those leases, all the rent rolls, all the T12s, the bank statements, the utilities, whatever they told you better match up with what you have. And if it doesn't, that's where the retrades nowadays come in. So you have to understand, number one, the motivation of the seller. If the seller is not motivated to sell the property and there are defects or there are inconsistencies with what you got before you actually sign the contract, the seller doesn't have to abide by what you're asking for. You know, very simple. I mean, back in 2018, we did a walk on a property. We signed the contract. Contract is up. During due diligence, we noticed that and we found out that there were Federal Pacific breakers. Zinsco breakers, those breakers that they catch on fire. Who knew beforehand? Now, for us to get insurance on this property, the insurance companies were mandating that we needed to change all over 200 breakers. That's a lot of money. Now, the seller was motivated to sell. So they came up and we said to them, how are we going to make this happen? Use the Chris Voss technique. And if you're looking for any kind of negotiation on how to negotiate real estate more effectively and any deals in any form of negotiation, I've done a couple of how-to videos. So go back on the Jake and Gino channel on YouTube and watch them because they are amazing videos on the different techniques of negotiation. And I would also tell you to go to the Jake and Gino channel and find Chris Voss. Just put in the word Chris Voss. We've done 2 podcasts with Chris Voss, one with his son Brandon, and we've done one with one of his team members called Derek Gaunt. You'll be able to find all you want in negotiation. He's amazing. And you know what? If you want some type of negotiation notes, I read Chris Voss's book several times. I've written notes on his book. You want the Cliff Notes version of it? Email me, gino@jakeandgino.com, and I will send you over my notes that I've taken on his book. Now let's get back. We said to the seller, Mr. Seller, It's going to cost us over $400,000 to change these. Now, if we don't buy this property, the next person behind us is going to find out the same exact thing. He's going to go or she's going to go to the insurance company and say, by the way, you're not getting insured. You need to change these. Now, if those buyers are severely motivated, I may have the risk of losing the deal because the seller may say, you know what, I'll take my chances with the next party. Now, you have to understand, retrades need to be fair. And I'm going to go over them in a minute or so of what you can and what you can't or shouldn't retrade. But that's just one story out of many. I remember in one of our first deals, it was actually our third deal. Jake and I were negotiating on a 22-unit property that we still own today. And I'll never forget, we're buying this property at $25,000 or $30,000 a unit, which is probably worth 130 or 140,000 unit today. But anyway, I remember Jake making a big deal about broken windows. There was about $500 worth of broken windows, and he was hemming and hawing. And I looked at him, I said, Jake, seriously, bro, windows? I said, that's a retrade that let's just eat that money. They should fix the windows. It should be part of it, but we're getting such a good deal. And that's I think the real crux of the situation. If you're getting a great deal and it's not going to cost you a lot, and there are other places that you can focus on in this deal, do that. But if you're just trying to nickel and dime the seller, at some point, they may just get fed up and say, take a hike. So it really depends upon how well the deal is and how big the retrade is and if you should or you shouldn't retrade. The last thing I'll say before we jump in to these different types of retrades is trust but verify. And lastly, do not become known as the retrader in your market. Please, this is not single family homes. You can do this in the single family home space and sort of get away with it. Although brokers start to sense that as well, and they don't want to work with people like that. Investors will put a deal in the contract knowing that that price is not going to work, and they are already going into a deal with the retrade in mind. Once you do that, once, twice, the third time, brokers won't take you seriously. They don't want to work with you because they look really foolish knowing that you put a deal in the contract with them knowing that that price isn't realistic, that you're going to go back and say, hey, LOI $4 million, but knowing that your strike price is 3.5 just to get that deal locked up. Now, they were doing this a couple of years ago because of the competition, but please, if you're in this business long-term, don't do that. Brokers can sense it and they do not want to work with you. Always trust but verify. Now, let's get jumping in to what are some of the things that you can do to retrade a property and actually, I don't want to say lose face, but these are legitimate, at least in my opinion. The first one is new information. You discovered new information of the property, such as structural issues. You didn't see the foundation when you were doing your preliminary walk. You couldn't see the roofs. The roofs have holes in them. You have to fix the roofs. You didn't get into all the units. There's 10 units that are down that you have to spend an additional $300,000 to get those up. Zoning issues. You didn't know zoning until you got into the legal part of due diligence. Let's take a quick pause. What forms of due diligence are you doing to uncover these discrepancies or inconsistencies? Well, you're doing your financial due diligence. That's the first one where you're getting your information, right? The second one is the physical due diligence. And please, as you're doing your physical due diligence, bring a really good inspector with you. And hopefully on the day that you're doing your inspection, it's raining, or as it is outside right now, it's dreary. Those pictures look terrible. And we've done that in several properties where you look at the pictures and they look a lot worse than what the property is. At least you have some ammunition to go back and say, well, look at that foundation. That foundation's got a huge crack in it. Never saw it. It's going to cost X amount to fix. Or look at those roofs. We finally had drones fly over them and there's holes everywhere. Or look at the drainage problem that when we walked the property, when it was dry, now all of a sudden there needs curtain drains and a lot of things that you did not see. So making that really known is something really important, going on there and seeing things that you didn't see. That's new information. We've gotten a lot of money back when there's a lot of units that were empty and we had said in the actual contract, we want them rent ready. And that's coming back into vogue now. But we want rent-ready units. We don't want units that are completely gutted out or cannibalized. And we can say, hey, if these rent-ready units aren't done, we want $3,000 per unit. And then if the unit isn't prepared or ready, we'll get that money back. Now let's get to this next one, because this one is a pretty common one, the appraisal issues. If the appraisal comes in lower than the purchase price, you can go back and say, by the way, price is $3 million, appraisal is 2.5. Let's retrade on that. And there's nothing wrong with that. Financing troubles. That's the next one. A couple of years ago, there was no such thing as a financing contingency. Good luck getting one a couple of years ago. There was such a demand for assets that people were putting these things on the contract without this contingency. Now, what happens if you're looking at this property and all of a sudden you're owning it and you're on the contract 30 days later, occupancy drops below a certain level, and banks come in and go, your debt coverage ratio is not where it should be? Well, if you don't have a financing contingency and you can't close in the deal and you can't get financing, bye-bye, you lose the property. Almost happened to us on one deal. We were fortunate that we got it resolved with the bank. But a lot of the agencies, Fannie and Freddie, they want 90 days for 90%. That's what they want stabilized. If it drops below that, you may be in trouble. If you don't have a contingency, you're in trouble. But if you do, you can go back and say to the seller, hey, by the way, you dropped. You haven't been doing your job for the last 90 days. You haven't been filling these units, or you've been putting in people that we didn't want you to put in. We want some money off the deal to make this deal work, to get the DSCR to where it should be. Seller can tell you, yeah, let's do it, or fly a kite. But that, to me, is a legitimate retrade. The next one, market changes. All of a sudden, and let's go back to the financing one, because market changes, I think, really ties in with the financing contingencies. But market changes, all of a sudden, you've got a deal and rates are 6%. When you negotiated the deal, all of a sudden rates shoot up and it just kills your deal. Well, you can do one of two things. You can ask for a concession, or you can tell the seller, we can't make it work. And what's really interesting is, depending once again upon the motivation of the seller, they may say yes, they may say no. You're rolling the dice. How badly do you want the deal? And how much has this affected the value of the property for you? That's the important part. And when you're looking at, rates shooting up, the seller's always in the back of their mind saying, well, if they shot up now, is it going to affect the next person in line? Or do I have to just go out there and take a chance on the next person? That's why it's important to make sure that these are legitimate retrades. I've mentioned them so far, these bunch that I have. And I think the last one, and I think it ties in with the first one about the new information, major capital expenditures. All of a sudden, you're doing your due diligence. You're walking through and you're saying to yourself, wow, this property needs a lot more work than what I thought it needed. And listen, if you're out there, you're buying 1960s and 1970s assets right now at a 5 or 6 cap, just be aware, because this is where you're able to retrade depending on the seller's motivation. If they need to sell this asset, if they've got debt coming due, they know the next person is going to have the same situation, because banks are tightening up. They're lending, they're looking, they're being more, I'd say, demanding as far as the assets go when they're looking at all the deferred maintenance, especially these older assets. So if you have that type of situation, say to yourself, okay, I've got my budget here, and just present it to the seller. You did your inspection, you went through all the units, you found an additional $242,000 of unexpected repairs that you're going to have to raise that capital for, or you're going to have to get the debt for. It's going to affect your IRR, your rate of return, whatever metrics you're looking at. That's a fair retrade. You did not see that. Seller is obviously not going to disclose it. You're looking at that offering memorandum. It's such a shiny, glossy, document that it's not a legally binding document. They can put in whatever they want in there. That's why you do your due diligence. And this last one to me, probably I would connect it with the very first one I did. So I'll end on this, and I'll just really try to put a nice bow tie on this. But the last one for me is this new information that I mentioned. When you're scrubbing through the financial data and you're looking at your T12s, and the seller told you that they were 94% occupied, and you find out in reality that they're 84% occupied. When you find out the rent roll is $90,000, but in reality it's $82,000. When you're finding out that expenses are a lot higher than what they proposed, when you're seeing that there's a lot of delinquencies AKA tenants that ain't paying. There's heads in beds, but those heads ain't paying. You can do one of two things. You can say, I want a concession off the price because this is not what was disclosed to me on the front end, or you can simply walk away. Once again, a couple of years ago, you walk away, there's someone taking that spot. Now, that to me is a legitimate retrade. And it's exciting because you have this 30 days of due diligence, of trusting but verifying, going through all those documents. We've saved hundreds and hundreds of thousands of dollars. And in this new information, let me give you I would say a little golden nugget or a secret. When you're going through these documents, make sure that you're looking at all the contracts. Do they have cable contracts? Is that conveying over to you? Or do you split the revenue, or did they front load it and they're keeping all the revenue? That's a concession or a retrade that you didn't know. If they've got a $50,000 cable contract, you're locked in for the next 7 years, but they've collected all $50,000. Hey, negotiate a little bit there. Number one, either ask for some of the money, or the seller can say no. We had that situation come up in one of our properties. They had about $15,000 worth of cable money that did not convey over to us. We knew it. We asked them. The seller said, bye-bye, I'm keeping it. It's mine. In theory, not really. We should have split it. We had a decision to make. We decided to say, you can keep the 15 grand. We like the asset. One of the best decisions we ever made. Same thing with laundry. Make sure laundry contracts. Do you own the machines? Do you not own the machines? And any other contracts, are they conveying over to you? If they aren't and there's revenue on the front end, make sure you're going in eyes open and saying, wow, I've got these laundry machines, these laundry contracts for the next 6 years. I'm not collecting any revenue on this because it's all going to the laundry contract because they front loaded it and gave me these new machines. You may go back to the seller and say, hey, Mr. and Mrs. Seller, how are we going to do this? I'm getting this property. I'm not going to be able to collect any of the revenue because it's such a big split to the laundry company. What can we do here? Once again, one or two decisions, either take it, walk away. Now, I hope that I've impressed upon you as you're listening to this, that retrading is a skill. To me, it's an art. It's a dance, but it only should be done if there are valid reasons. And the reasons that I've listed above that you've listened to over the last 10 or 15 minutes, to me, are all valid reasons. You want to go into a property and take a property over with the right ammunition, with the right budget. You want to be, as we like to say, realistic when you're taking over a property. You want to go in with eyes open, making sure that everything that you've seen, you're able to at least have money set aside for and you're able to tackle. Because if you take a property over and then you find all these things that are unexpected, you're going to be in big trouble. And how do I know that? I've made dozens and dozens of mistakes. And you'll always make mistakes on properties. But as you get better, you'll start eliminating those mistakes. And listen, if you want to learn more on how to avoid mistakes, just go to jakeandgino.com/apply. Learn how to work with the team. If you want to learn more about multifamily, email me, gino@jakeandgino.com, and I'll give you a free copy of our Wheelbarrow Profits book. It gets you started. We talk about the due diligence process in the book. So if you want to learn more, just go to jakeandgino.com. And one last thing, brokers are in a tough situation. They're trying to get a buyer and a seller to come in agreement. Don't beat up the broker so much. Ask them about the retrade. Give them at least the respect, saying, hey, I'm thinking of doing a retrade. What are your thoughts? What do you think? And a really good broker who sees the veracity or the truth in this retrade will probably say, hey, you know what? That's a good idea. Let me bring it to them. Don't be so demanding. Always say, how can we get this done? I want to close this deal, but you see my problem. Give them, as Chris Voss would say, the accusation audit. Hey, I love the deal, but there's roof issues, foundation issues, the T12s don't match up. Start with that. Give them the proper ammunition, the proper information before you just go out and demand that retrade. Good luck to all of you out there using the retrade in this part of the market cycle. Thanks again for listening to me here on the How To Show, and we will see you on next week's How To. Take care, everyone. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.